wanted to get back into another video talking about basically trend shifts again. This is like my third video, and this is what I'm actually planning on doing. So this is this is US Swiss franc. I trade Forex and I trade gold. Gold is a type of future. I don't trade anything really other than that, and I just keep my charts really simple. So the first thing that I usually do is market structure, like I said in the last video, and I'm looking to buy this pair because we don't have confirmation that we're actually in a bearish trend. And the reason we don't have confirmation is because when usually there's a trend shift, for example, if the trend's going up, like I said before, then we need price action to do more than just break a structure that was previous. It needs to come back up again and re-correct itself and then continue going down. That shows me that there is enough supply in the market for there to be dominant enough for me to actually take setups. So what I'm going to do is I'm going to just go like this, rewind, and I'm actually looking for buys for that reason. So yeah, we could continue going down, but we don't have that confirmation yet. So what I'm doing right now is I'm actually trying to buy, and I'm buying specifically to the shaded area that I'm drawing on the screen right now, which is our inefficient price action, this imbalance gap or fair value gap. So the imbalance gap or imbalance is just the inefficient price action, and then the fair value gap is the specific location of that imbalance. So here would be the fair value gap, right? The gap of value. So this has a lot of selling value in it because we had price action dump, but we aren't in a, like I said, a bearish trend yet. So what I'm planning on doing is I'm actually going to look for a quick buy, and I do this sometimes. I'm actually going to buy, and I'm looking to take out this liquidity right here that says buy side liquidity, that little tiny little trend line. I'm actually looking to buy and take that liquidity out from the retailers, and my take profit, I'm not actually going to take this trade right here. It's not going to look like that. My take profit would be here because this is where the inefficient price action is. And so this is where I'm expecting some sort of pivot point or reversal from. So whether the price is going up like this and going down, or whether price is going like this, down and then up, it doesn't really matter to me. All I know is that there's inefficiency in the market, and then whenever there's inefficiency in the market, price always has to come back and recorrect itself. And so what I'm doing right now is I'm actually going and I'm looking at the screen, and I'll go into, this is the 1 hour chart. We're going to go to the 15-minute chart, and the second I see a break of structure, I'm actually going to look for a retracement, and I'm going to buy. So I want to look for a break of structure on one of these highs right here with the arrow, one of these highs, and then when I look for that, and if price isn't going straight up, I'm actually going to wait for a retracement slash correction so I can buy into the to kind of ride all the way up here. So back here, if you notice that blue rectangle box, the smaller one, we had a break of structure right there. Sorry about that. We had a break of structure right here, and this break of structure was literally right here. This is how I draw mine, and I draw it like that so people can see it, because when you do it straight across, it's kind of like it gets smaller. So break of structure, that's the break of structure, and the reason that's the break of structure is because the trend right here, if we turn it to the line chart, we see all this down, up, up, down, up, down, up, down, up, down. The trend was bearish, and then the second it pivoted was at that break of structure point, which was right there. That was when price attempted to change its trend, and it broke a structure. Literally, it broke this structure right here. And so after it broke structure, what did it do? It retraced itself to that gap slash demand zone. And so that's literally how I trade. I just trade demand zones, and the specific demand zones that I trade are gaps and order blocks. This type of demand zone, because a lot of people don't tell you what the actual zone is, this is an actual gap. This is called a fair value gap. And I'm pretty sure some of you guys have heard about this, trading ICT or ICC or futures, smart money concepts or smart money concepts. This is a fair value gap, and this gap, we call it filled. So when they're filled, they're unusable. So when it's filled, you'll see a wick or price action, like I said, right there. You see how it goes into the box? It went in, and it actually filled in inefficient price action, and then it went, touched this, and it went back up. And there's actually another gap right here too that I didn't look at right here. You see that, what I'm just drawing? and I'm going to label it right there. There's two gaps. There's the first gap and there's second gap. Most people will ask, well, how do I know which gap do I trade? You're going to actually take the lowest gap. That's how I was trained. So this would be the lowest gap slash demand zone that we have available. And so that's where we would actually be taking our trade from if this is where we were buying. But this is what wasn't where I was buying. But that's what happened. So if you'll notice, you'll see a lot of wicks react to these zones or levels. So there was a wick right there, and that usually lets you know when the market is looking to change its trend or reverse. So you can look at it as like dipping your feet in a cool pool that's really cold, and then you don't like it, so you take it out. That's how I look at it. And so we had that wick, and then now price is going back up. And so the question is price going to continue going up by breaking this structure, or is price going to go and retrace from here and go back down? That's why I like to have a system, because your system basically um, allows you to trade when you have confirmation of the things you want to have confirmation for. For my case, break a structure, and I want to know not only break a structure, I want to know that there's actual demand or supply in the market. So hence buying and selling. So when this, like I said, when this breaks this high, I'm most likely going to wait for it to break that and come back down before going again. And I'm going to, or I could, some people would just buy here and then just expect it, but I don't do that. I always wait for confirmation. And that's pretty much what I'm doing on US Swiss franc, because today we had US news earlier. And whenever there's news, you don't have to trade during the news. You can trade either before or you can trade after the news. I like to trade sorry, you can trade before or after news. I like to trade either before or after the news. So I'll only trade really after the news if there isn't like more news after that. So if there's like a US news event at 8:30 and then there's an event at 4 p.m., I'm not going to trade. I'm not really going to trade it that day. But if everything happens in the morning, that gives me a kind of flexible opportunity to trade before or after. And so what I'm going to do is I'm basically going to wait until, like I said, that break structure happens, and then because New York session ends at 5 p.m., I still have here it's 2:36 p.m. So that means I have at least like 2.5, three and a half hours, and so I'm going to just basically expect another chance for me to get in, and that's how it works. So really, if you're trading in the morning, your trade setup should align with the actual news. So, like for example, if you see a trade or you see the euro moving at 8:30, and then you already had a prior setup to euro, and it kind of aligns, like your entry aligns with the news, then I would take the trade. So, like if we had, like I said, 8:30 news on euro, and it's like 7 o'clock, and then I'm looking at the chart and I'm like, oh man, but I can enter right now. This is my trade setup, hit my entry right now before 8:30. Then you can trade and enter. That will be trading before the news. And so trading after news is just simply waiting for the supply and demand to change the market and create a change so you can actually get in on that retracement. And so that's pretty much all I wanted to share for that. And I'm not really looking at any other setups because today we only have US news, and I have more news on my watch list, but I'm not looking to trade those because I didn't find a setup on them. So you also want to trade less times a week. I trade about 6 times max a week. And sometimes I don't even find all 6 trades a week, but that doesn't matter because you're just trading the quality trades or quantity trades, and you're wiring your brain and mindset to be able to just leverage off of little and less trades so you can make more money and just trade professionally without blowing your account and just taking trades all over the place. And so yeah guys, this is pretty much what helped me, and I'm going to end the video here because I don't really make a lot of videos that are like 20 minutes long. I just like to get straight to the point and make them around 10 minutes. And yeah, no, here's another thing. You want to keep your watch list short. So you see how my watch list right now is short, and I only have about like 7 um yeah, I have 7 assets on here. So I have like Bitcoin, I have like gold, I have all this other stuff. And so I'm actually only looking for, if I was trading right now and I found another setup, that would be it. So I'm only allowed to trade like 2 setups. I'll get 2 tries max per day. And so that still counts. So if I trade, let's say 2 times today, and then I trade 2 times tomorrow, and then I trade again, that's 6 trades. So if there's still another 2 days, I can't trade because my 6 trades were already taken. And so that's how it works. And some days you'll find one trade, some days you'll find two. And when I do trade twice, I don't take more trades when I reach that 6 trade threshold. And yeah, that's pretty much it. If you have any questions, just ask me. I hope you guys enjoyed this.